You think that financial advisor at your bank is working for free? I've got some bad news for you. That free advice is likely costing you thousands of dollars every single year. And no, I'm not exaggerating. Your bank advisor is often recommending the bank's own mutual fund, and those funds can charge up to 2.5% a year in fees. So every year, a part of your money goes to fees instead of staying invested. Let me put that into perspective. If you have a $100,000 portfolio, that's 2,500 gone, not just once, annually. And the real problem is not just the fee itself, it is the compounding. That money is not staying invested and growing for you. So, in this video, I want to show you something interesting. If what you really need is help with investing, taxes, and retirement planning, there are now AI powered tools that can handle a lot of that for little to no cost. And once I understood that, I looked at financial advice very differently. If you're new here, hi, my name is Medha. For a long time, I did what a lot of people do. I trusted the bank, assumed the advice was good, and did not really question what I was being put into. But once I actually started looking at the fees and comparing my options, I realized I was paying way more than I should have been. That pushed me to start learning more about investing tools, robo-advisors, tax software, and AI-driven platforms that help regular people manage money better. And honestly, once I made the switch, the difference was huge. So in this video, I want to break down 3 things. First, what a financial advisor usually helps with. Second, where the hidden costs often show up. And third, 2 tools that can help you to do a lot of the same things more efficiently. Please note this is educational only, not personal financial advice. Let's start with the part that a lot of people do not realize. When you go to a bank for investing help, the person sitting across from you may be helpful, but they are also usually limited to offering the bank's own products. A lot of the time that means mutual funds, and this is where fees matter. With mutual funds, one of the biggest costs is the management expense ratio or MER. In Canada, these fees can be pretty high compared to lower cost investing options like ETFs. Now, a fee of 2.25% might not sound shocking when you first hear it, but over time it adds up fast. Let's say 2 people each invest $100,000. One person goes into a higher fee mutual fund with 2.25% MER. The other one uses a lower cost ETF portfolio at around 0.4%. If both portfolios earn the same return before fees, the person paying less in fees keeps more of that growth year after year. And over a long period, that gap can become massive. And that is the part people often miss. Fees do not just reduce your returns once. They keep dragging on performance every single year. And because the fee is built into the product, a lot of people do not really feel it. They're not writing a check for it, it just quietly reduces what their money could have grown into. Now, to be fair, financial advisors do help with real things. In most cases, their job comes down to 3 main areas. The first is investing. They help you choose accounts like a TFSA or RRSP, figure out your risk level, and put together a portfolio. The second is tax planning. Usually that means helping you think about things like account types, deductions, and how to be more tax efficient. And the third is retirement planning. This is the part where they help answer questions like how much I need to retire, am I on track, what happens if I retire early, or what if I save more. And for a long time, you really did need a human advisor for all of that. But now technology is getting good at handling a lot of these tasks, especially the more data-driven parts. Not all of it, but a surprising amount of it. So let's look at the AI tools that we can use. The first tool is Wealthsimple. If you are in Canada, you've probably already heard of it. And there is a reason it has grown so much. It made investing feel much simpler and much more accessible for regular people. Wealthsimple has 2 broad paths. The first is managed investing. This is the robo-advisor option. You answer questions about your goals, timelines, and risk tolerance. And the platform builds a diversified ETF portfolio for you. So, if you're someone who wants guidance but does not want to pay traditional mutual fund fees, this is the option that will probably feel most familiar. The second option is self-directed investing. This is for people who want more control and are comfortable choosing their own ETFs or stocks. You can open accounts like a TFSA, RRSP, or FHSA and invest on your own inside the platform. What I like is that the interface is simple. It does not feel intimidating, which matters a lot if you're new to investing. The second big piece is taxes. Wealthsimple Tax is one of the strongest parts of the platform because it makes filing much easier, especially for people with straightforward or moderately complex tax situations. It can pull in information from the CRA, and if your investments are already with Wealthsimple, that integration makes things even smoother. So instead of entering everything manually, a lot of the information is already connected. That does not mean it replaces professional tax advice for every situation. If you own a business or have a very complex setup, that is different. But for many people, it covers a lot. So, between investing and tax filing, Wealthsimple already handles two of the three big jobs many people go to an advisor for. And they are rolling out an AI powered research feature where you can search for stocks using plain language, like find healthcare companies with earnings report this week, and get similar summaries of what's moving and why. So the AI side of Wealthsimple is only going to get stronger. And if this is already making you rethink how you're managing your money, subscribe to the channel. This channel is all about using AI and technology in practical ways to make everyday life easier, and money is a big one. Now, let's talk about the third piece, retirement planning. While Wealthsimple is amazing for investing and taxes, what about that big picture retirement plan? For this, we need a more specialized tool. My go-to recommendation is a platform called PortfolioPilot. It is an AI-powered dashboard designed to give you a complete 360-degree view of your entire financial world. It has a free tier that gives you a ton of value. You can connect your different accounts so you can see your financial life in one place. That includes investments, cash, mortgages, and other accounts depending on what you link. One of the useful features of PortfolioPilot is that it reviews what you own and looks for problems. For example, it may flag that your portfolio is too concentrated, that you have overlap across funds, or that some holdings are more expensive than they need to be. That kind of visibility is helpful because a lot of people think they are diversified when they're really not. However, the bigger picture for me is the retirement simulator. This is where the platform becomes genuinely useful. You can test questions like what happens if I retire early, what if I save a few $100s more each month, or what if markets underperform a few years? And instead of guessing, you get a more structured projection. That is valuable because retirement planning is really about trade offs. You want to understand how one change affects the bigger picture. So, if Wealthsimple helps with execution, PortfolioPilot helps with strategy. And when you combine both, you're covering a lot of the same areas people usually rely on an advisor for. Now I know what some of you are thinking. Why not just use ChatGPT or any other chatbot? And the answer is yes for learning. For action, not really. These chatbots are great for explaining concepts. You can ask questions like what is the difference between a TFSA or an RRSP? What is an MER? Or how do ETFs work? That is where it can be really helpful. But I would not use a public chatbot to upload personal financial details, account information, tax documents, or anything sensitive. For that, use secure financial platforms that are actually built for those tasks. So, I see general AI tools as a great place to learn, but not the place to manage sensitive financial decisions directly. Just to sum up, what matters most is that a lot of people are paying high fees without even realizing it, just because that is what they were told to do. But now you have options. You can invest, plan, and manage your money in a much simpler and lower cost way than before. So, before you do anything else, go check the fee on your current investment. Just find that one number, because once you know what you are paying, you can decide if it is actually worth it. I will leave a link to Wealthsimple in the description below. Full disclosure, it is an affiliate link, which means I may earn a small commission if you sign up. It will cost you nothing extra, and if this video helped, like and subscribe and comment with an MER on your current investment. See you in the next video.